Welcome to today's market report. European stock markets edged higher on Monday, continuing the global rally as investors gear up for a busy week of earnings and economic data, with a Federal Reserve meeting also thrown in. DAX in Germany traded 0.4% higher, CAC 40 in France rose 0.3%, FTSE 100 climbed 0.2%. Global stocks markets have been lifted to record levels by signs of a global economic improvement, typified by the early April manufacturing activity indicators out last week, with purchasing manager indexes hitting record highs in the United States and signaling an end to a double-dip recession in Europe. Germany's highly watched IFO Business Climate Index continued the trend for improved sentiment, climbing to 96.8 in April, above the 96.6 level seen in March, although this jump wasn't as impressive as had been expected. More concrete economic data comes in the form of the first quarter US gross domestic product numbers later in the week. Amid expectations, activity is fast returning to pre-pandemic levels. Also of interest will be the latest policy setting meeting of the Federal Reserve, which concludes on Wednesday. Fed Chairman Jerome Powell is not expected to announce any policy changes, but is likely to face questions over whether an improving labour market and rising coronavirus vaccinations warrant a withdrawal of monetary easing. Back in Europe, Volkswagen stock slipped 2.5% after the Financial Times reported the company was warning about a bigger production hit in the second quarter due to a global chip shortage. Philips stock fell 2.6% after the Dutch health technology company booked a provision of up to 250 million euros from a possible safety risk in some sleep and respiratory care products, even while posting a 74% jump in quarterly core earnings and raised its outlook for 2021. On the flip side, Pearson stock rose after strong growth in online education helped the UK publishing giant lift revenues by 5% in the first 3 months of 2021, while IMI stock saw 7% after the UK engineering firm lifted its full-year guidance and launched a stock buyback program. A lot of corporate attention this week will be on the US tech giants, with Tesla, Facebook, Microsoft and Apple among the companies due to release their earnings. Oil prices weakened on continued concerns that rising numbers of COVID-19 cases in India and Japan, the third and fourth largest crude importers in the world, respectively, while hitting demand for the product in Asia. US crude futures traded 0.9% lower at $61.56 per barrel. Brent fell 1% to $64.80 per barrel. Both contracts fell around 1% last week. Gold futures were up 0.1% at $1,778.70 per ounce. On the FX front, GBP/USD has been rising as the safe haven dollar retreats from the highs. Optimism about the NI protocol, Britain's vaccine milestone, and bullish BOE comments may boost sterling. The EU and the UK are reportedly negotiating a quid pro quo deal on dealing with trade in Northern Ireland. Brussels has made new offers to London, potentially allowing for a breakthrough that could resolve issues and allow for more fluid comments. Leftovers from Brexit remain a drag on the British economy, and any progress could add another boost. Britain's rapid immunisation effort hit a significant milestone. Over 50% of the population received at least one jab. This headline, alongside the ongoing fall in cases, is helping the pound despite worries about India's out-of-control COVID situation. Another reason to be bullish on the pound comes from the Bank of England. Deputy Governor Ben Broadbent said he sees very rapid growth at least during the next couple of quarters. Above the daily high of 190.30, the next resistance line to watch is 139.50, which helped GBP/USD down last week. It is followed by 140.10, the stubborn April high. Support awaits at 138.80, a swing high from last week, followed by 138.60 and 138.20. Euro-dollar is seeing a key test of resistance at its March high and potentially downtrend at 121.13. A close above here can see next resistance at 122.12, according to Credit Suisse. The ECB announced that it bought a net 31.98 billion euros of assets last week as part of its quantitative easing program, compared to the 17.009 billion euros a week earlier. This pushed the euro-dollar lower, whilst the dollar index was at 90.778, near levels not seen since end of February. Dollar yen was lower at 107.81, while Aussie dollar rose 0.3% to 0.7769. Risk appetite has been boosted of late by strong signs of global economic improvement to the detriment of the dollar. This is today's market news. Thanks for listening. We'll see you next time.